Good morning, traders and investors. It's Friday, July 11th. Looking at the charts, we've got equities down this morning with obviously more tariff talk and all kinds of stuff streaming out around that. So we've got equities down, depending on the indice, it's down about 0.5% to about 0.9% with the Russell down the most. But let's just take a look at the daily chart. We've got a couple key levels here that the market has reached. So if we were to just take a look at this using Fibonacci extension, after it's put in this high volatility washout low and rebound, if we take where the next kind of rally out of that noise took place, using Fibonacci extension, we can get an idea where this run up was, where we had this pullback, this multi-month kind of sideways pause. And then we can draw that forward to where we are right now. And you can see we get to the 618, which is the golden ratio. If you don't know Fibonacci theory or Fibonacci sequence, look it up. This is the most powerful ratio right here. And I've always talked about that. If we have the rally up, the pullback, and we get to the 618 level and the market has a pause, then we're probably going to go up and hit that 100% measured move, which if we just move to the chart to the upside here, you can see the upside potential on the S&P 500 if this is going to play out. So the market, if it can clear and get above this level, once it's finished this pause, then we've got a pretty substantial move. Percentage-wise, let's just take a look from where it is as of this morning. It's about a 5% move to the upside. So it's looking pretty good in terms of where the markets could continue to unwind and run up to if this level is cleared. Now, it's interesting if we were to look at the chart again. Let's just look at the shorter term price action using Fibonacci based on this rally up, and just based on this rally here. We've got the low, we've got the high, and it came down to this low. So this is a rally up and a little bull flag. This tells us where that next upside target is. And if I was to carry that forward, you can see we've come all the way up to the 100% measured move. So there's two critical levels here. A short-term chart, the most recent one saying, hey, that's just based on this rally and this pullback, that's where the next 100% level is. And on the larger time frame, the 618 is right there. And of course, we've got potential for the markets to want to run all the way up to about 66.28 to the upside. So that's why we have this pause. We also hit the market. We hit new all-time highs right through here. And of course, that is where the market, we saw a bunch of shorts covering. We saw people with FOMO who didn't take part of this rally start to pile in and get in. And so we're just running out of steam. It's kind of been an emotional move. The shorts have taken a nice loss. Those with FOMO who aren't in are now buying close to a peak. If not, this could possibly be a peak. They're buying up near the high, and potentially a couple of months from now, we could see the market's a lot lower and they will have bought the high. So that's kind of where we are. Again, when we look at our overall strategy, we're long the S&P 500 with the SPY, and also the SSO, which is 2X, which is up over 20%. You can see where the market went from a bounce to more full-on rally mode, and now it's broken to new all-time highs. And the NASDAQ is the same. We're up 14 to 28%, depending on the ETF. If you trade the single or the 2X ETF, up really nicely, very close striking distance to hitting a 15% target, which is ideally would love to be hit today if this market can get some traction. If not, probably next week. But that's how the strategy and the markets are unfolding at this point. So today, when we go back and look at where money's flowing, it's flowing out of stocks. We are seeing bonds actually move down as well. And I think that has to do with tariff talk. Simply if we're talking about a 20% blanket tariff for pretty much all countries, that means there's going to be like some inflation. Everything's going to become a lot more expensive, which means interest rates, the Fed may want to continue to hold rates up or move rates higher, which means if rates go up, bonds are going down. And so that's not a very good sign. Bonds look like they have a little bit of a bear flag forming right here. It's sold down. It's got this little bit of a bear flag. It is pointing to, somewhere right back down into this lower level, which again, if we were to just stretch that out, we could use Fibonacci. You can see the potential down to about 110 on the bond futures, which brings us right back down to these lows that we saw back in May. So